Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our weekly video report for Tuesday, June 14th, 2016. So last week, I did the report on Wednesday, and I had said even though the markets have been pressing higher, the rug could be pulled out at any single second because we had sentiment that was stretched at extreme bullishness. We had bearish divergences, and we are at resistance. And sure enough, from there, we've seen the S&P that has dropped, pretty much 60 points in a straight down move. And it's not that, that wasn't a surprise to us just because we knew exactly where the sentiment was. So I had mentioned that we have a black hole drop that is pending, and it's going to be coming. It could come next week. It could come next month. Woody Dorsey has the exact date on that. But the reason why it's important is that there have not been too many of these calls, and this is going back to 2014 September. We've had 1, 2, 3, and now we're about to get to 4. Each one of them has dropped over, the S&P dropped more than 200 points. Now, this is something I read on a website that I thought was kind of interesting, and it has, many years ago, the head of technical research at Merrill Lynch told his analysts to know what everyone knows about the markets is to know nothing, and he wanted them to find indicators that nobody knew about or was using, because the ones that everybody was using were useless. And I found that fascinating because it's so true. We'll look at these people talking about the MACD or this or that, and usually that kind of stuff comes out when we are in the middle or towards the end of a trend. Everyone thinks they know what is going on when they really don't, because they don't know where sentiment is. They don't know when the technical turn date is coming. And, from that, everybody is trading off of the same stuff. And that is why the majority is always wrong. They're always trapped on the wrong side of the trade. And that's just the way it is with this market. So as you can see, there hasn't been many calls for these crashes or the kill zones. And the thing that is, just to put that into perspective, is this is going back to the first, this was the black hole drop right here, and that was in September of 2014. So let's just say you bought on this day, on September 2014. It was trading right around 2020, the S&P. The S&P, I think it was at 2070 at the close today. You're up 50 points in 2.5 years. But yet, if you just took the short side, let's forget about the long side, because you could have done that also. But the short side of the last 1, 2, and 3, if you would have done those 3, you were up over 600 S&P points. So you have 50 points with the buy and hold, and you had to, go through all these ups and downs. Or the exactly when these crashes are coming, when to sell and when to buy, and you can make unlimited amounts of money is really probably the way to put that. So the main thing with sentiment is that everybody is going to get bullish at the same time. Everyone is going to get bearish at the same time. And as long as you can track that and you know where people are, you're going to know how safe of an environment it actually is to be buying or selling. So what do you put down in today's report is that sentiment's coming in today at 4% bullish, which is the lowest in some time and lower than any period trading lows. That's significant, as you noted, that new negativity was required. And at this stage, negativity would only breed negativity since we're in the beginning of a trend. So we had 90% on June 8th. That was right here. That was the exact top, and we dropped. We're now at 4%. So does that mean that it's a buy? No. As what he said, it means that it's confirming that this is an important high right here. So could we bounce? Well, let's just take a look at our regular charts here. And this is a 15-minute chart, and you can see we do have some bullish divergences. If they head lower tomorrow first, really what you want to keep an eye on is the 2061 and then the 2057. If those get taken out, because remember, fear is stronger than greed, Then we're coming all the way down to the 2045. The safest trade right now is to, if you're short, don't add new short positions here. You just kind of let things roll and move your stop along. And then if we bounce, re-short once we get into the resistance. And really what the bulls have to do is get it through the 2079. But if they get there, then they're going to run into that important 2085 resistance. And if they can bust through that, then we're probably coming up to the 2101. But the thing is, these crash patterns that Woody has identified over the years, they have specific patterns that they follow, and it's something that I've been watching, and this all makes sense with what's going on right now. And like I said, the majority will be bullish when the markets crash, so that is something to just to keep in mind. So anyway, like I said, we do have a black hole crash coming. This is the type of alert that Woody put out. This is the kill zone, and that was on August 4th, 2015. He put out the report that it's supposed to hit between the 14th and the 21st. On the 18th was the kill zone, and the S&P dropped over 200 points. So we have another one of them coming. So it's going to be pretty important. But the good part is that we're going to get some trades in between that time period. And you're just going to know that once we start approaching the black hole drop, hey, you just want to position yourself on the short side, because so far he's predicted 3 of them, and 3 of them have come true. So to expect that this one won't come true either, it hasn't been a good winning trade for anybody. So if you're interested in making better trading decisions, then you should subscribe now. If you're ready to start trading with confidence, knowing dates in advance on when to expect market reversals, and being able to use investor sentiment to back up which way the market should be going, then you need to subscribe now. And if you're interested in getting the same market timing forecasting that some of the largest financial institutions in the world have depended on, then you need to subscribe now. And we are offering a special. It's $2.99 for 2 months, and for the first 2 months, and then we are going to be giving you the 3rd month free. So 3 months, $299.99. You're going to use the code 1FREEMONTH. We are only opening it up to 20 people, same as we did last week. Those spots filled really quickly. And with Woody's track record over the past 40 years, really your biggest risk right now is not knowing when the black hole is coming, because if it's, like I said, the majority is going to be bullish when this hits, and that is why all of them lose money all the time. So if you subscribe to Sentiment Timing, I am giving you a free membership to Markets Path. I do video reports each night, morning notes, email trade alerts, and we also have a trade room. And as long as you remain a member of Sentiment Timing, you get a free subscription to this, and I charge $80 a month. So if you stayed for a year, it's $960. But like I said, we have some very, very important time periods that are approaching, and there's going to be you can be able to make a lot of money. So if you're interested, take advantage of the special, and with that, I'll talk to you guys next week.